Sunday, January 12th, 2020, Maneco 64, home of alternative economics and contrarian views. This morning, I want to warn UK investors, investors all over the world, how they must be careful of trusting regulators, national financial regulators. In this case, I'm going to look at the FCA and the mini bond debacle that's going on in the UK. And I'll look at a couple of the articles to warn you about these mini bonds, basically junk bonds that promise high returns like 7 or 8% in a world of 0% interest rate as well. You need to always be careful if someone is promising a high return in a world of very low returns. All that means is that it's very risky. So I'm going to look at a couple of stories I saw this week in the FT. The first one is thousands of LCF bondholders may miss out on compensation. Less than 2% will definitely receive redress, says Financial Services Compensation Scheme, or FSCS. That's the scheme in the UK, similar to the FDIC, that ensures deposits and investors. So let's have a look through this first article by Caroline Binham and Sarah Proven from January 9th, 2020. So article says, just a tiny fraction of 11,600 investors in Collapse Investment Group, London Capital and Finance are certain to receive any compensation according to the UK's redress scheme of last resort. Before I go on, just wanted to say that I get a lot of adverts online from these kind of schemes about investing in bonds that are returning 8 or 10%. I just delete it. A lot of them you will see have the FCA, which is the Financial Conduct Authority, which is the equivalent of the SEC in the UK. They've got their imprimatur, so to speak, on their material. So let's keep going. The Financial Services Compensation Scheme said on Thursday that just 155 bondholders, or 1.4%, would definitely receive compensation, ending months of speculation for the first-time investors and retirees on whom LCF pushed unregulated mini bonds before its £236 million collapse a year ago. A further 283 bondholders will receive nothing because they invested in LCF before June 2016, when the group became authorized by the Financial Conduct Authority, the FSCS said. So that's the important part there. They became authorized by the FCA in June 2016. Doesn't mean they were like regulated by them. This is the bad part of this story, and I'll continue. You will see why it's bad in a minute. But for the vast majority of bondholders, there's an agonizing wait to find out whether their investments will be wiped out. The FSCS said that it must review on a case-by-case basis the vast majority of claims to determine whether investors received misleading advice. However, it warned that many customers will not be eligible for compensation on this basis. The LCF scandal has underscored the confusing thicket of regulation and compensation decay for investment products. While LCF itself was regulated, mini bonds are not, and therefore not generally covered by the FSCS, unless bought after encouragement from a regulated advisor. It does not seem a fair or right outcome, said one bondholder, who added investors are trying to make sense of the FCS announcement, but the general reaction is very negative. There's strong arguable case that LCF was engaged in a number of regulated activities, albeit without FCA permission, which resulted in 236 million pounds of financial losses, for which there should be compensation, the investor said. So there you go. Very confusing for pensioners, people who are not used to investments, who are not familiar with how investments work. They're told that the group is authorized by the FCA, but they're not told that these mini bonds are not regulated. It's very confusing and very dangerous. And the FCA has a lot to answer for, in my opinion. So I continue. Some bondholders claim they even received misleading advice from the FSCS itself before investing. So that's the insurer, national insurer, or FDIC equivalent. The FSCS is hoping to give another update at the end of February. This is an official from the FSCS. Her comment: I regret that LCF investors impacted by the firm's failure have been waiting several anxious months to find out whether or not they may be reliable to receive compensation from FSCS, said Caroline Rainbird, the scheme's chief executive. I appreciate that the initial decisions and outcome we are announcing today are likely to be disappointing to many LCF customers. The 159 investors will receive compensation by the end of next month. The small group switched from individual savings accounts or ISAs that were underpinned by stocks and shares to LCF bonds. The Treasury had authorized LCF as an official ISA manager. So there's another part that is really screwed up. You've got LCF being authorized by the FCA. You've got mini bonds not being regulated, and you've got the UK Treasury authorizing LCF as an ISA manager. It's total nightmare, really. So let's keep going. The FCA, which has come under heavy fire for missing red flags around LCF's business model, in December took emergency action to temporarily ban the promotion of certain mini bonds to retail customers. Mini bonds help fund loans to small businesses, but unlike listed retail bonds, the products can be high risk because of the higher failure rates of these enterprises. LCF was promising returns on its mini bonds as high as 8%. So what does it mean that it's not listed? Well, it means that it's not listed in the markets. It's not easily, how can I say, marketable. You can't buy and sell it as easy. It's not as liquid. And that's one of the problems they had as well with the Woodford Fund. They invested in a lot of illiquid securities that they couldn't liquidate when their investors wanted to redeem their funds, and that's why they collapsed. Another failure by the FCA to keep an eye on things. Let's continue. The LCF scandal has sparked regulatory and criminal probes, as well as a statutory investigation into any missteps the FCA took. Bondholders are hoping that Dame Elizabeth Gloucester, the former Court of Appeal judge who's leading the latter investigation, will find that the FCA failed in its regulatory duty, which would also trigger a payout. It is noteworthy how this decision smooths things over for the FCA in that context, but in doing so, it produces illogical and unfair distinctions between investors. said Thomas Donegan, a lawyer at Sherman and Sterling, who has advised some bondholders pro bono. Investors who lost out on identical products or based on equally misleading written and online materials. There's the online materials I was telling you about, or who invested in ISAs via subscription or transfer of an external cash ISA will be rightly asking why they are being ignored. So what is the solution for investors if you can't even trust a regulator, if the rules are so complicated? You've got in one part, the investment company is authorized by the FCA. On the other hand, the products they sell is not regulated. On one hand as well, the investment firm, LCF in this case, was authorized by the UK Treasury to sell investment products or ISAs. It's really confusing. I personally try to stay out of these deals or stay out of them altogether. One thing I've been doing, and many of you do know that already, my regular viewers, is that I try to stay out of the system. I try to accumulate precious metals, gold and silver. Gold and silver have no counterparty risk, of course. They've been a stable store of value for thousands of years. They might not be sexy, so to speak, give you returns or income, but in the end of the day, what happened at LCF won't happen to a gold coin or a silver coin or bar. They will always be there. They will always hold their value. You can store it as well, insured, or you can hold it yourself. You got to make sure it's in a safe place, of course, and of course, nothing is secure in life. But at least you will know that that gold coin, silver coin, or bars are still worth something. Many of you who've never been involved or bought gold or silver ask me where they can get it. I have a promo code with Gold Investments. They're family-run bullion dealer in the City of London. They've been operating since 1981. I have a promo code maneco64, which you can quote when you speak to them. You get a 0.5% discount. I've been dealing with them since around 2002, so they're a reputable firm. And if you're not, if you're unfamiliar with gold and silver, they can explain to you how to go about buying gold and silver, which coins or bars to buy, and how to store it, the costs and everything. So have a think. I'm not advising you to do that. I'm just telling you that that's what I do. And if you're interested, you have an option. And I also advise you to look at other bullion dealers online to see if you can get a better deal. They might have a better deal than Gold Investments. I'm just telling you that I know them, and they're reputable. You need to be careful with everything, of course. So let's get to the second article. But this is from earlier this year, from May, and it's another FT article. It says, MPs demand speedy probe of London Capital and Finance. Select Committee warns on 12-month deadline for inquiry into investment firms' collapse. It's Caroline Binham again, writing the article. So let's go through it. MPs have warned the UK Treasury that an investigation of the £236 million collapse of London Capital and Finance, which sold unregulated mini bonds to retail customers, must not be kicked into the long grass. Nicky Morgan, the chair of the Select Committee, to which the Treasury is answerable, expressed dismay that an independent investigation of the scandal will not be concluded for another year. LCF's collapse has left more than 11,500 bondholders, many of whom were first-time investors or pensioners wondering if they will ever get their money back. So this has been going on for quite a while, this saga. So now you see that the latest story that people are going to lose all their money. Very few are going to get compensated. And why does this keep happening? Because we had Woodford Fund recently. We had some in 2016, I think, or 17. There's some funds, property funds that failed. We had the '08 crisis where banks collapsed. Building societies like Northern Rock collapsed. Why do people keep making the same mistakes? Well, I think it's because people don't do their homework. They look at the literature or the website and they see FCA on it and they say, oh, it's fine, it's regulated by the FCA. But just because something is regulated doesn't mean it's safe. And we've seen now time and time again. And you need to really do your due diligence and always remember the term caveat emptor, buyer beware. So don't even trust the FCA. Don't trust the FSCS, the insurance scheme of the government. Just because it says it's insured, it doesn't necessarily mean they're going to pay you out. I just want to finish off saying that the man who's been in charge of the FCA, let's see, for the last 3 years, he's going to be taking over as governor of the Bank of England. His name is Andrew Bailey. Just wanted to let you know, are things going to improve? Don't hold your breath for improvements. So the guy who's been at the helm at the FCA these last few years, he's going to be at the helm of the Bank of England. If you enjoyed this video, please hit the like button, share it far and wide. It helps the channel. You can also follow me on Twitter, BitChute, DTube, and Steemit. I wish you all a great Sunday. Take care. Bye.